So Rhythm, let me kick off with you because the recent Morgan Stanley report has been circulating, claiming why this is going to be India's decade. And everyone's been asking me, but how can it be India's decade when the whole world seems to be collapsing?
Yeah, thank you, India Today. Thank you, Abba. It's a real pleasure to be here. So there are four big trends in the world right now. We've got a problem with aging, so it's a demographic problem. We've got a problem with deglobalization. You hear China +1, Europe +1, everybody's becoming +1. There's a third issue with digitalization that's creating a disruption, and a lot of existing businesses, including media businesses, are finding it tough. And there's decarbonization because the world is obsessed about climate change. India probably is the only country in the world that's benefiting from all these four trends. There is really no other country that is on the positive side. Either countries are facing an aging problem or are going to see a big disruption of legacy capacities in fossil fuels, etc. Okay?
And we seem to be at an inflection point, isn't it, Rhythm? Because in the overall context, even in terms of how per capita income is at that, just about that $2,000 mark.
Yeah. But again, Abba, with the risk of sounding pro-government, the fact is that in the last 5 years,
especially after the last session.
In the last 5 years, we've done a lot of heavy lifting on policy. So India is set to become the factory to the world. It's set to become the office to the world. It's undergoing a massive energy transition. We're going to get liberated from the erstwhile energy price volatility. And we've got this amazing digital infrastructure called India Stack. At the base sits Aadhaar, which is so unique. Nobody in the world has that. And it's going to give us digital solutions that the world doesn't have. So these are mega trends that are underway in India. Some of them are purely because of good government action. Some of them are private enterprises. But that's what's leading to our optimism that in the next 10 years, India's GDP will likely more than double. Our per capita income will be past the $5,000 mark. More importantly, the number of households that will sit at the top of the pyramid are probably going to quintuple. So they'll go from 5 million to 25 million, which is why Louis Vuitton has made Deepika their brand ambassador. We're likely to see strong stock market returns. And I'll just give you a little bit here before I hand it back to you. A lot of people say India has disappointed in the last 15, 20, 30 years. And I say, how do you measure that disappointment? Going back to the previous session, the point on statistics. Because India is the second best performing stock market in the world. Okay, so it is not likely that we have disappointed. We are only behind America in US dollar terms, okay, ahead of everybody else that people believe had done better than India. So a lot of change underway, and I cannot but just be optimistic.
Clearly. And I'm going to come back to you on some concerns also, Rhythm. But Bala, talking about some of the numbers that Rhythm just pointed out and the way we're looking at growth booming and per capita spending, what's that going to do to the consumption story? How big an opportunity do you see in India, especially at a time when we are seeing a little bit of uncertainty in the global context? Are we really going to be decoupled? Are we going to be immune to that? And are we going to see that boom coming in?
Just taken from what Rhythm said, I think India is fundamentally getting better in the sense that I think India is one country have gone through multiple challenges in the last so many number of years. I think if you look at the last 7-8 years of journey, I think we are preparing for the future in a manner that every policy initiative that is being taken by the government, either by the central level or the state level, is supporting actually the future growth of the country. You take right from the time demon happened, the entire digital awareness in the country went up. The UPI, which of course done a revolution in the banking systems, nowhere in the country has happened. Today, every citizen of the country is able to actually use the UPI platform for payment transfers in the country. Therefore, the entire country is getting connected so seamlessly, which naturally I think should lead to an increase in awareness. That awareness should lead to increase in consumption and so on and so forth. That's something fundamentally I think we are getting better. Second is every policy initiatives are not short-term in nature. We are not doing any short-term fixing. Everything we are doing actually is more intended towards building the future of India in a manner that whether it is a Make in India theme or whether it is a Digital India theme or even the ONDC platform which is coming in, which is the One Nation Digital Commerce Platform, which is again coming in, is going to connect the entire country, whether it's from the commerce point of view or from the customer point of view, is going to connect it. That's also, in my view, fundamentally, I think things are getting better for the future. And then the third is actually the 80% of the population lives in the rural India. I think if you travel around the rural India, though the dependence of the rural India is coming from the agriculture sector, the awareness about how agriculture sector can contribute to the GDP of the country, that's one. And second, how people can become, earn more money by remaining in the agriculture sector, not leaving the agriculture sector and go to the cities and migrate and so on and so forth, but continue to focus on agriculture sectors and increase your earnings from agriculture per hectare point of view or acre point of view, and yet have a peaceful living life. Which is nothing but rural India is getting connected by your roads and other things, also actually making the India to prosper, which ultimately should lead to the increase in consumptions. There is absolutely no issue on that. Second is the current problem that we are facing in the world market, or something unique we can say probably for the world market, or they were not prepared for energy crisis. See, one, we can of course blame the Russia-Ukraine crisis and so on and so forth. The fact of the matter is, the worldwide, nobody was prepared for energy crisis price to go up so much because nobody has built their own capacity. India is one building capacity for themselves. So there was a time when Make in India was being created, there was some kind of criticism which came from the world market that why India should produce for themselves, they should produce for the world. The very fact that India is producing for themselves today, we are now becoming self-sufficient. I think this is going to actually make India look far better as we move forward because of the change in the culture. The last year, of course, is the population, as I mentioned about the young population. The new age which is coming in are no more are dependent on work life. I think they will probably, the number of people actually choose to become an entrepreneur will be far higher than the people actually want to actually work in a place. Which has changed in the culture. The startup culture is changing in, that naturally is going to make people in every city of the country to become more richer. As a result of that, consumption as a theme will only go up. And currently, of course, if you look at the automobile sector, first time ever, all of us would be reading in the newspaper, the waiting period of car has gone up from maybe 3 months to about 6 months, which I never seen in the past. Maybe I would have seen it maybe 20 years back when I was booking the scooters, where I wait for about 1 year period. Today we are seeing a waiting period. What does it mean? The demand is good, is coming from rural India, semi-urban India. At the same time, the aspiration levels are rising. At the same time, money availability in the hands of people is going up.
And we're seeing that in the way stock markets are moving as well. Atul, you've been very big on the demographic story as well, and you've also been tracking really how all of this is going to stack up to move markets higher. Give us your perspective, and also how, taking off from what Bala said, this is really going to be driven by the domestic story, and it's really going to be some of the old cyclical plays that are going to come back and really capitalize on that.
Thanks. So let's put things in perspective. As the markets stand, we talk about Nifty, it's a good index, we all follow. It's at 18,100. About a year ago, we were at lifetime highs, which was 18,600. So essentially the distance from lifetime high is 3%, which is pretty good. Why I say that is because if you look at, we know a lot happening in China. The Hong Kong market is 40% from lifetime highs, right? Tech, NASDAQ, absolute sweetheart. Everyone wanted to invest in a NASDAQ ETF. Everyone wanted US exposure. The NASDAQ in the last 1 year is 30% from lifetime highs. S&P 500, the top 500 US corporates, 20% from lifetime highs. So if you really go and see that among the top 20 to 25 global markets, the market nearest to lifetime highs, means showing relative strength, is actually India. So there is a method in the market, or is a belief system, that stocks that fall less in falling markets are leaders of the next bull market. I want you to reflect on it. It's a big takeaway. That the real test of markets, stocks, companies and industries are in difficult times. And those stocks, those industries that fall less in bear markets, actually when markets turn around, are leaders. And that is a characteristic India is showing. So the last 1 year has been a global bear market. I put out some numbers for you. But India is the markets that fallen the least. So in my 30 years that I've been in the markets, I have never seen this. And let me add on another negative point, that in this last 1 year, the total FII selling in this country has been $50 billion. So whenever FIIs used to sell, Indian markets used to tank. What's happened here? How come we've fallen so much less than global markets in spite of a $50 billion sell number by FIIs? What shifted? The shift is that there have been almost 40 billion that have come in from domestic flows. Every time over the last 30 years, I've been a broker, I've seen it at retail, institutional levels, whatever. Whenever markets tanked, Indian investors ran out of the door. FII bech raha hai, nikal jao, bhag jao. Markets are going to crash. But this is the first time that in fact we have seen positive flows. So now I want to think that, hey, what's happened here? Why aren't Indian investors panicking? How come they're adding on 40 billion? And you know, we all talk of this demographic shift. We refer to it other industries, etc. But the biggest beneficiary of the demographic shift is happening in India, in Indian markets and Indian investment patterns. You know, when I invested in the market, probably in my full family generation, I was the first guy who ever bought a stock. But today when I speak to my cousins, family, friends, even people with a salary of 10 to 15,000, they have a 1,000 rupee systematic investment plan going to mutual funds. So that is demographics and play. And if these habits come in when you are at 25, 30 years of age, the runway is the next 20 years. So the biggest beneficiary of demographic shifts is going to be this domestic flows. And we've seen this in the US. Between 1980 and 2000, the Dow was 1,000 in 1980, it got to 10,000. And what was the shift? Was this demographic play. I'll just end by a beautiful line my mentor told me, Rakesh Jhunjhunwala. Before he passed away, I was with him one day, and he says, Atul, sab पूछते हैं अपना time कब आएगा? Saying, beta, अपना time आ गया है. That is the shift. That is the demographic shift. And that is why we are a market that's fallen less. We will be the first to break out to lifetime highs. And I feel that we are entering a decade of leadership backed by this big, big demographic shift propelled by domestic investors.
Absolutely. I think the biggest, vindication of that is the way markets have been resilient and continuing to test new highs. The retail investor hasn't looked as shaky or as nervous as one would have anticipated. Since we have, a limited amount of time left, I'm not going to go to the concerns. I'm actually going to go to what everyone wants to know, and that's what should they buy, right? So Rhythm, and I know you're going to talk to me about long-term plays, and it's a 20-year story, but, what are you seeing as the big opportunities for the next couple of decades?
So just before I go there, I'll just supplement one point that Atul made, because that's a very important point on the domestic bid. It has actually altered India's macro. So the transition actually happened in January 2015. And people have forgotten about this. That was when the Modi government, for the first time in India's history, allowed retirement funds, which is provident funds and national pension scheme, to buy stocks. They are buyers every month because they only get inflows. And people underestimate the importance of having such consistent buying. The same thing happened in 1980 in America. President Reagan had allowed 401k plans to buy stocks. Until then, 401k plans were not allowed to buy. And then you got a 20-year bull market in America, domestic flows as well as rising share prices. So I keep telling people, because there's huge skepticism about the domestic investors, we're still very, very early in this game. It's going to last for 2-3 decades, So it's a...
Everyone asks me, how long are you going to live in this fairy tale world of domestic investors investing? Kabhi to negative hoga. And they've been waiting for the last 14 months. And every month, they're getting surprised. But that's the way it is.
On the sidelines, Atul and I were discussing about the Harshad Mehta bull market. In 1992 or 1991, households put 25% of their saving into equities. Okay? Indian households have always liked to buy equities. Then the market crashed and that whole generation went away from equities. They got scarred. If I take today's saving pool and compute 25%, that's a whopping $200 billion. Okay, we're not even at the tip of the iceberg of what domestics can do with their portfolios and buy stocks.
So yeah, go ahead, Bala.
The way we contributed as a mutual fund industry, So you mentioned about 1992 Ashwamedha scam. Maybe the mutual fund size would have been about 40,000 crores or something. 40,000 crores or 50,000 crores. Today we are sitting at 20 lakh crore size. And it's still growing only. So that's something what you say, that's the hard work and the belief and faith and of course the experience. All of them do matter. And also the future. As long as the future is bright, the confidence remains high. So that's something I think what you said, all of us said about the culture is changing.
But I was going to say, clearly equities have become the asset of choice.
So I think investors should focus on businesses that are facing inside India, which will benefit from the coming growth rates. The quintessential sector for everybody to buy is financial services. It kind of benefits the most. We think, credit to GDP in India is 57%. Even adjusted for our low per capita income, this is really low. China's credit to GDP, private credit to GDP is 225%. So just imagine the difference here. And the US is also a number well past 200. So Indians are going to borrow more money, Indian companies are going to borrow more money. So I think financial services. The other place is consumption. You asked this question to Bala. So I think India has a very unique position in the world. We have consumers at every level of the income strata. Right at the bottom, people who are struggling to meet their two ends meet and who are also sleeping hungry. And at the top, people who are going to take vacations abroad and buy Louis Vuitton purses. Everybody is going to go up the consumption bar. So I think consumption and financial services will be my two pointed bets. There will also be a set of companies that will benefit from the fact that the typical CEO in the world now is comfortable about work from home. And it's better to work in Mumbai than Florida. It's a whole lot cheaper. So companies that get exposed to those trends will also do well in my view.
So since we've talked about this being a domestic-driven story now, if there was one domestic risk, let's forget the global factors for a moment, one potential risk back home that could disrupt this entire story, what would it be?
I think it's the price of commodities. I think we all know that how important crude is. It's our largest import bill. And I also look at global commodities and the way they are panning out. So the global risk is truly inflation. And the fact is that commodities, and especially the way crude is behaving, is something that worries me. And crude, I think, is not a function of demand and supply global. There's so much geopolitics involved. Saudi, Russia, US. So I think that what I would be worried about is the way commodities are shaping up. I would have thought that crude has no business to be at $90, $95 Brent. I think it should be nearer to 65, 70. But I am getting challenged. I'm getting challenged. And my fear is that if we head back, if we pull up, as I said, it's more due to geopolitics than demand and supply. I think that could sour India and Indian macros. But Abba, that will be a short-term cyclical risk. It doesn't take away from the longer-term story, which I still think is a very big demographic story. It's almost like a decadal kind of move that we are likely to see.
One more I put in the mix is to 2024 elections. Okay, we have forgotten that the electorate can put a minority government back. And in, I think 2004, May is a good template. The stock market went down 17% in a single day, went down 30% in the subsequent 4 months. And it took a while for us to get back. And the global markets were in a boom phase that time, so it was very different. So what happens in 24 elections will be, I think, important. It won't be a small event risk for the market.
The third thing it could be I think interest rate structurally is getting changed. I think we can't ignore it. Which essentially means as interest rate goes up, the cost of capital goes up, the return on investment comes down. I think we may go through that cycles. Therefore, what Atul mentioned about, Rhythm mentioned about, the short term, we may face these kind of risk. Therefore, making an assumption that yes, equity will continue to give return and go through a cycle, that also need to be understood. But long-term bullish, but short-term we may see this kind of volatility setting in.
So since we're still seeing short-term volatility, I don't know what target to ask you for. I always ask Atul every Diwali, every New Year. So I'm going to try it with him first and then come to you, Rhythm. I know you won't give me necessarily a target. But Atul, with all this volatility, what should I ask you? Financial year end?
I mean, see, it's targets, when I'm talking about a decadal bull market, honestly, Abha, giving targets, etc., doesn't matter. But yeah, if you look at it at a 1-year time horizon, I have been on record and I'm talking about Nifty because that's what we track. Yeah. It's 18,000 right now, 18,100. So I think we'll see about a 21,500 kind of move, which could be a 20% kind of up move from here. I think that's pretty good because your comparative assets are nowhere near that. So I personally feel that, and there's a lot more that you would make through stocks. I feel a lot of sectors will do very well. I mean, just to take from where you are, we are down 3%, as I said, on a one-year basis. But something like capital goods, a very broad sector, is up 25%. So as a direct equity investor, there's no reason why you cannot outperform or do much, much better than that, which I think is a fantastic opportunity in Indian markets.
20 to 25% is pretty good. Rhythm?
See, Abba, I will not get drawn into this at all, because I'll tell you why. It's of no use to anybody. Okay? The better thing for me to say here is, look for good businesses managed by good people, trading at reasonable prices, and just be happy.
Okay, but at least tell me if you're agreeing with the 20 to 25% or 10 to 15 on
Okay,
your
let's-
radar.
No, actually, I don't want to get drawn into it. I'll tell you why. Because, as we've seen in the last 1 year, the stock markets are down 3% in India, yet we all feel that it's a bull market. We're down, we're not up. Okay, it's not going to be a good year. This year is a bad year for stocks. Okay, and yet we feel like we're in a bull market. The reason is because everything else looks bad. I have no idea what everything else is going to do. Okay, what if everything else goes up 20%? What if everything else goes down 20%? We don't know. So I think the problem with returns is it's all in the context of a relative, so let's not really, I think, we should not ask people for targets. We should ask them what you should do with your portfolios. Buy.
Just if you can just
Yes,
elaborate
sir.
on that.
Closing comment.
I don't think any of the people sitting on the floor would have actually estimated index will be at 18,000 Nifty, RDB, Sensex would be about 60,000. Had you asked us about 10 years back? So any period you analyze, I don't think anybody would have got it right. Therefore, it is actually a futile exercise to put a number where it would be. But one thing remains constant ever in the stock market is the compounding effect.
Yeah.
Whether you take 8% compounding or 10% compounding or 14% compounding, with the GDP plus nominal, if you take the compounding, that is the real number, it will fructify. The question is, over a period of time, it does materialize. Therefore, rather than predicting where the index would be, have a conviction that yes, compounding effect could definitely come in the market.
Yeah.
Therefore, add up the number, it will lead to the number what is also talking about it.
All right, gentlemen. Buy, buy, buy. That's the clear headline coming out of this panel. How?
I said not BYE, BUY.
Yes, thank you so much, all of you. Great having this powerhouse of a markets panel with us today, and the conviction on India really comes through. Thank you so much.